So we will be, or actually I will be recording this session tonight. So that is awesome. Get that all taken care of. So we will be able to, what's up, Mick D's? Be able to share it with everybody who's not able to make it tonight. What's up, Dregs? How's your back, brother? How's your back? How is your back? Hello, Nelford. Good job, good job, good job. Right on there. Ski. So no one's saying anything. What's up, Kaz? How you doing there, brother? Dregs, your back okay? Did you get those weights inside, brother? All right, very good. Didn't have to roll them. What's up, Big Randy? I'm going to give everybody just a couple more minutes to file in here. We are straight up. 8 o'clock. What's up, Uncle Fester? Again, straight up 8 o'clock on the Eastern Seaboard. 7 o'clock. What's up, J Marv? MBH. I see your hand up, J Marv. I'm not going to invite anybody to speak, though, right now. But I do see your hand up. Reasonable 5 o'clock in California. What's up, James? How you doing there, Rashid? Could you please give your entries and exit times when you get started? I'll get over that. I'll go over that, Byron. Yes, I will. Absolutely. I can tell you I had first trade of the day was a small win. The next two trades were small loss, two small losses, nothing really big, and then hit a couple of good ones after that. So, yeah. Yep. But it's not about that tonight. It's not about that. Hello, Singh. How you doing there, my friend? So what we are going to be doing tonight, let's get this show on the road. We're going to be going over the 920 strategy as well as the psychology of strategy, or the psychology of trading, and I am going to share my screen. So there we go. Bada bing, bada boom. Can everybody see my screen? That is the question. You should be able to see my screen. Somebody give me a thumbs up or a hey. Okay, got it. First thing we're going to start off with tonight is the 4 stages of learning. Now, a lot of you in here have heard about the 4 stages of learning. Some of you, particularly the new folks, have not heard of the 4 stages of learning. And this is very, very important to trading because you will find yourself in one of the different 4 stages. More than likely, there's quite a few people in here I know are in stage number 2, and that's okay. But before we get to stage number 2, let's go to stage number 1. The first stage of learning is called unconscious incompetence. Unconscious incompetence basically means you don't know what you don't know. You have no earthly idea. So you can look at somebody. This stage is basically blissful ignorance. You watch somebody doing something, any particular skill. It doesn't matter what the skill is. Okay, the skill is not important, but you watch somebody doing something with relative ease. You look at them and you say to yourself, man, that looks easy. I can do that. And you quickly realize that they're good at it because they've practiced and they become, they can operate at a very, very high level. And again, I don't care what the skill is. It doesn't matter because these different stages of learning, literally, it's everything. It's everything. So it's our confidence actually exceeds our ability. Okay, so we have super, super high confidence. And again, think back to any skill, and in particular trading. You look at trading, you see somebody doing it, they're doing very, very well, and you go, I can do that. That's really easy. I know how to read a chart. This is easy. I'm going to make a killing. I'm going to retire next week. I'm going to become a billionaire. I see lots of heads, yeah, lots of laughs, that kind of thing. We're actually unaware of the deficiency of our subject or skill. We just don't know because, again, this is unconscious incompetence. Now, we must become conscious of our incompetence before learning can begin and the new skill develop. Leads us to the stage 2, the second stage of learning, which is called conscious incompetence. This is where you go from in stage 1, not knowing what you don't know, to stage number 2, you know what you don't know, and you realize you really don't know a whole lot. So while our confidence was really, really high in stage 1, it drops drastically in stage 2. Because we realize that we just don't know what we're doing. Our confidence drops because we realize that our ability is limited. We feel very, very comfortable. And we become aware of the existence and relevance of the skill as well as our deficiency in this area. And again, we begin to realize how much we don't know. Now, whatever the skill is, again, whatever the skill is, it doesn't matter. Now, by a show of hands, I'm going to switch back. Hello, Kristen. By a show of hands, how many of you right now have found yourself in the second stage of learning? I will, Drago, but that's not what this is about. That's not what this is about. I'll be happy to do that. I'll do it at the end, though. Okay, so the stage 2 of learning. There's a lot of people in the second stage of learning. And again, it's like any skill out there. Stage 2. Hold your head high. Hold your heads high, folks. You have to hold your heads high. This is the stage that most people quit. This is the stage that most people quit. They quit because they realize that this is a really, really, really difficult thing to do. It is. And again, you go back to that second stage right here. Your confidence drops because we realize our ability is limited. Now, when it comes to trading, because we're putting real money on the line, our confidence takes a big hit because we're giving money back to the market, giving money back to the market, giving money back. And so we develop over time some pretty nasty scar tissue. Okay, and again, that's where most people quit. They just quit. And that's understandable, realizing that 95% of all traders out there, retail traders, they will lose money in the stock market. That's just the reality of it. It's not some made up BS statistic that I came up with. That's the reality of it. Now there is a statistic that says 90% of all traders will lose 90% of their account in the first 90 days of trading. Next question for the group: how many people have blown up accounts? How many people have blown up accounts? How many people have so much scar tissue developed that you don't think that you can go on? God, look at all this. Yes, exactly. Okay. How many people are on the verge of quitting? That's the next question. How many people are on the verge of just, man, this is awesome. This is awesome. In the back of the mind of somebody out there, they're thinking, man, I can't do this. I can't do this. Thought about quitting recently. Exactly. I'm going to tell you this. Most people think about quitting. I know I have. I mean, there were some really, really tough times where I'm like, I don't know if I can do this. And I thought about it for a few minutes and said, you know what? No, this is not going to get the better of me, but I have to do something different. I have to do what the 95% of all traders are not willing to do. Okay, what the 95% of traders, not today, good job, Boomer. The 95% of traders are not willing to do. Okay, back to the stages of learning. This is where the most learning occurs. Stage 2. It kind of brings me to a real quick story. Most of you have heard the story of the miner. He staked a claim in California, I guess probably 1849, 49ers. Went out there, sold everything that he had, bought all the mining equipment, and looked on his map and said, okay, this is where the gold vein is. And I don't know the veracity of this story. I don't know if it's just a story to make a point. But he dug and he dug and he dug and he dug and he dug, and he finally gave up. Went back into town to sell his equipment. There's another guy in there, and the guy says, you know what, I'll buy your equipment, I'll buy your claim too. And bought it for pennies on the dollar. Looked at the maps, did some basic calculations, and thought, you know what? This guy was literally 3 feet from gold. This guy started digging, and guess what? He was 3 feet from gold. 3 feet from gold, folks. That's exactly where you are. That's exactly where you are if you are in stage 2 right now. And again, if you're in stage 2 right now, the easiest thing in the world for you to do is quit. And you can do that, and nobody's going to be mad. Nobody's going to be upset. You're going to wake up one day and go, I just can't do this anymore. So you're either going to wake up that day and go, I can't do this anymore, or I've got to find another way to do this. I've got to get better. Okay, so we realize that by improving our skill or ability in this area, our effectiveness will improve, and we must make a commitment to learn and practice a new skill and to move to the conscious competence stage of trading. That's what it is. We achieve conscious competence, or you know what you know. Okay? When we can perform that activity at will, that skill at will, it takes our attention, it takes our concentration. But again, we can perform it at will. We need the concentration to think in order to perform the skill. We can perform the skill without assistance. Okay? That's a big one right there. The purpose of our group is to teach people how to fish. Not to fish for them, but to teach people how to fish. That should be at least the first goal. The first goal should be to not quit. After that, it's okay, let's get past stage number 2. Let's get into stage 3, conscious competence. Okay? And again, you realize how much you've learned at this point. Now, because we've learned so much and we're able to execute on our trades without making trading errors, our confidence level necessarily goes up. So we have to have that competence in order to have that confidence. Because remember, in stage number 1, we had all this confidence, but we had no confidence. And by the time we realized that we really didn't know what we were doing, our confidence took a big hit. So our confidence grows in stage 3. Now, the lucky few that are able to move from stage 3 to stage 4, this is called unconscious competence. This is where you no longer know what you know. You just look at it and do it. And again, I don't care what the skill is. The skill does not matter. The skill does not matter. The only thing that matters is you can look at the chart and go, okay, I've looked at 10,000 charts before and I've studied this for 5,000, 15, 100,000 hours, whatever that number is. You can look at it and go, man, this is a good play. This is a good place to put on a trade. Calls look good here. Puts look good here. Okay? And then you just sit back because you've trained yourself to do it. Okay, so those are the 4 stages of learning. Those are the 4 stages of learning. And fibs, exactly. Fibs, the orb. That's the orb. Exactly. 1-800-Lionel, I am recording this. And Chuck D, so, yeah. Yes, spied off. Yes, it is. But again, remember, stage 1, high confidence, low skill. Stage 2, low confidence, and you realize that you really aren't very good at it. Okay? And that's okay. That's okay. Good job, Josie. That is awesome. You got to keep on fighting there, MBH. You know that. You know that. You work through that stage 2. And again, this is the most difficult stage to work through. It's the most difficult stage to work through. If and when you can get to stage number 3. That is when everything starts to click. And that's when I have this saying. The saying is, trading is the most difficult, easy money you will ever make in your life. The most difficult, easy money you will make in your life. Because again, if you can get past that stage number 2 into stage 3, and if you're one of the fortunate ones to get to stage number 4, guess what? Buckle up. It's time. Okay? It is absolutely time. And you will do as well as you ever thought about doing. Actually, you'll only do as well as you think you will do. You'll never exceed your own belief system. 2.5 deuce, that's fine. Keep on digging, my friend. Keep on digging. Okay, so we went through the 4 different stages of learning. I'd like to go over a little bit of the psychology of trading before I get into the charts, and specifically the 920 strategy. And for those of you wanting me to call out my trades later this evening, yeah, I'll probably do that. But again, this is not about this. This is about mostly psychology, 920, all that kind of good stuff. Okay, so the psychology of trading. Everybody has to realize that anybody can learn to read charts and develop a trading edge and plan. Anybody can do that. But what is the most important, I'm asking the group, what is the most important part of that plan? What is the only thing that matters in trading? I mean, you guys already know what it is. It's execution. Execution is nothing more. There you go, TMC. Risk management, that's all part of the plan, though, MBH. And I will absolutely get into that. So execution is nothing more than entering and exiting when the market gives you a signal to get in or out of your trade. And until you can execute trades without trading errors, you have no business increasing your position size, period. I don't care how much money you have in your account. And again, these are my opinions. Okay? I don't care how much money you have in your trading account, because that is immaterial. That is immaterial to what we are doing here. Okay? Now, based on your specific trading plan or your edge, you never, ever, ever put on a trade until the market gives you a signal to put on a trade. And here's the kind of thing I wrote here a while back. If you wouldn't trade 100 contracts, you shouldn't enter the trade. A test trade? What's a test trade? No. The market has to give you a signal. The market is going to always give you a clear signal when to get into the trade. Likewise, the market will also give you a clear signal when to get out of the trade. Two ways to trade, folks. Two ways to trade. You can be a P&L trader, and there's absolutely nothing wrong with that. That is a very effective way to trade. You put on the trade, you make your money, you get out, you wait for your next signal. Absolutely nothing wrong with that. But there's always a signal to get out of the trade. Now, let's talk about trading errors. Because the two biggest trading errors are what? And I'm going to let you guys answer this question. What are the two trading errors? The biggest trading errors. Rumi has been listening. Rumi has been listening. The two biggest trading errors are hope and fear. FOMO's a big one too. But you're not following your trading plan. Yeah, absolutely. So that's a trading error. Now, hope comes into play when you're on a bad side of a trade. When you're on a bad side of a trade and you're holding on to that, yes, eating like a bird and shitting like an elephant, absolutely. You're on the bad side of a trade. You are on the bad side of a trade. So what happens? You hold on to that trade. Oh, it's got to come back. It's got to come back. It's got to come back. And you hold and hope, hold. And then, yes, 1-800-Lionel, you average down, and that is, why do we do that? I'm not showing a chart right now there, Veronica. No chart. So that's hope. So the consequence of holding and hoping, the consequence of that major trading error, the hope, is that you're taking these big losses. You're taking these really, really big losses. Now, in order to get out of, and it's fear, it's pain, it's the pain, it's. I'm not showing a chart right now, Trader Joe. Not about that. Not showing a chart right now. Just showing this right here. Just all this right here. The only way to not hold in hope is to do something. And I didn't come up with this. This is not me, but man, it makes perfect sense. I say it all the time. You must predefine your risk before you ever put on a trade. That can be a specific line of support. It can be a specific line of resistance. It can be a specific candle. It can be breaching of a moving average. It can be a Fibonacci line. It doesn't matter what it is, but you must predefine your risk before you ever enter a trade. You have to do that. If you don't do that, you're gambling. We're not really in favor of gambling in here. We want to be the casino. We're the ones stacking the probabilities in our favor. We don't want to be the person going into the casino. We want to be that casino. Don't do that, knobs. You got to predefine that risk. If your stop hits, and you guys know me, I don't close on wicks. I wait for candle closes. That's fine. But you have to predefine that risk. If you don't, you are just looking to blow your shit up. I'm telling you that right now. So the other side of that coin, the cousin to hope, is fear. It's fear. So fear comes into play when you find yourself on the right side of a winning trade. You find yourself on the right side. Somebody's nodding their head. Oh yeah. You find yourself on the right side of a winning trade, and what you do is you're watching your P&L. You're going, it's a little bit green. It's a little bit green. Oh, that's good enough. It's a little bit green. So what you do is you close out that trade before the market ever gave you a clear signal to get out of that trade. So you hope and you take these big losses. And you fear because you are fearful when you are in a trade that you're going to give money back to the market. You have to stop doing that, folks. You have to stop doing that. I'm telling you. You're just going to keep on blowing up accounts. There's enough people in here who have blown up accounts and are tired of funding those accounts. The only way is to predefine that risk before you ever put on a play. And make the assumption that it's going to go against you, so get ready to get out of that trade. But you have to predefine that risk. And when you're on the right side of a trade, you have to let it go to its natural conclusion. When the market says yes, you have to listen to the market. When the market says no, get the hell out. Oh, yeah. And Jeffy, yeah. So the worst thing you can ever do, folks. How do you know it's saying yes? The chart's showing you that it's saying yes. You can see the runs. Just watch price action. Watch price action. The market is saying, yes, stay in the trade. There's no reason to get out of the trade. And again, I trade differently. That's fine. I hold my winners a hell of a lot longer than a lot of people. Not as long as some, but I cut those losers. I have more losers than probably around a 70%. Yeah, and it does depend on your strat. Absolutely. Win rate of about 70%. So I lose plenty of trades. I don't care. I do not care. You absolutely must earn the right to size up. No question about it. What's price action and how do you look at it? You're looking at the same chart that I'm looking at every single day, my friend. The same chart. Now, the strategy does not matter. Just like Fib said, the strategy doesn't matter. You can use Fibonacci retracements. You can use Keltner channels. You can use moving averages. You can use support and resistance. It doesn't matter what strategy you use. The only thing that matters is you are able to execute. You are able to execute. That is the only thing that matters. Okay. Let's see. And again, as retail traders, what we like to do is we like to eat. We don't like to do it, but we just do it. It's human nature, folks. It is human nature to hold on what we've made. Those unrealized gains. Oh, it's a little bit green. If you're playing trend lines, and again, it doesn't matter what your strategy is. You have to be able to execute your strategy without trading errors. Now, as human beings, not as traders, but as human beings, we are born. It is in us. What's the word I'm looking for? We look for patterns. We look for patterns in everything that we do. We look for. Think about. People look for patterns in clouds. Everybody looks for patterns in everything. They'd like to make sense of what they're seeing, so they look for patterns. Okay, so they look for patterns. So here's something that's really interesting. In the stock market, patterns present themselves with statistical reliability. Would you all agree with that? Patterns present themselves with statistical reliability. It's true. Statistical reliability. But the outcome of those patterns are random. So we don't know what's going to happen. I got a head and shoulders right here. I've got an inverse head and shoulders. I got a cup and handle. I got an inverse cup and handle. I don't care what it is. They present themselves with exactly, knobs, exactly. They present themselves with statistical reliability, but the outcomes of those patterns are random. So because of this, we must focus only on the execution and again, the process. The process is the only thing that matters. And again, we've got the red-green poll, green-red poll up at the end of the day. That's going to say, as a group, how we've done as a group. But again, Process matters more than profits. Process, process, process. And I'll be talking about the 20 trade challenge here in just a little bit. Okay, so I'm going to get into, so bear with me here for just a second. There we go. We're going to talk about Pdaddy trading strategy. I mean, I call it the Pdaddy trading strategy because I wrote all of this out. Can everybody see the Pdaddy trading strategy? I think you probably can. Okay, very good. So I am going to get back to it. There we go. Okay. 920 trading strategy, the 920 trading strategy. I started off with the trading laws. But I also want to say that the 920 crossover trading strategy is not a new trading strategy. I didn't come up with this. This is not original on my part. Now, the basis for this strategy is support and resistance. The combination of these things makes this strategy, highly probabilistic. As with all strategy, there are nuances that can only be learned through hundreds, if not thousands of hours of screen time. And the goal is to always watch more and trade less. Trading law. And I call them laws. You can call them rules. I don't care. If it's a law, you're less likely to break it than if it is a rule. Trading law number 1, protect your capital at all costs. You cannot grow your capital unless you protect your capital. So blindly entering trades without a good reason is gambling, and we don't do that here. Always, always, always wait for trade confirmation before entering a trade. And again, I don't care what your strategy is. If you want to be a 920 player, that's fine. Support to resistance, resistance to support, fibs, I don't care what it is. Trading law number 2, I already talked about this, but always predefine your risk before entering a trade. This can be a candle, a level of support or resistance, specific dollar amount, or specific percentage. I use the candle that got me in, I call it an ignition candle, as the candle that will get me out of the trade if the trade goes against me. So I kind of look at it like this. If the candle is good enough to get me in, it's going to be bad enough to get me out if it breaches and holds above or below that specific level. Law number 3, always follow the trend. Do not trade against the trend unless there is confirmation that the trend has reversed. You cannot perfectly time the market. Do not try. Again, this is gambling, and we don't do that here. Law number 4, it's like flying airplanes. Well, it's always better to be on the ground wishing you were in the air than being in the air and wishing you were on the ground. Like, it's better to not be in a trade and wish you were than to be in one and wish you weren't. But at the same time, if you wish you weren't in a trade, you didn't predefine your risk. Law number 5, emotions are your biggest enemy. You can only be successful with this or any other strategy if you keep your emotions in check. And we've already talked about this also. The biggest two emotional, the killers are hope and fear. And again, we've already talked about that. Law number 6, generally speaking, that's why I say typically, the first part of the move is typically the strongest. Law number 7, contracts will lose value in times of consolidation/accumulation. Contracts will also lose value through theta, or the time decay of money, the closer you are to expiration. I like to trade the first couple of hours of the day and be done. That's when you get, generally speaking, you get your best plays, unless it's a FOMC day, something like that. A day like today, obviously later in the day. Law number 8, let your trades play out to their natural conclusion. And again, there can be pushback, but this is just my belief and it's my opinion. Do not be too quick to close out your profits or to take your profits. You should always have a spot on the chart, typically support or resistance area, that should be your target. Law number 9, successful trading is based on probabilities. We are not reliant on a trade-by-trade basis to be successful. Rather, we rely on a series of trades over time to judge our trading effectiveness. Read that again. We are not reliant on a trade-by-trade basis to be successful. Rather, we rely on a series of trades over time to judge our trading effectiveness. Law number 10, you will have winning trades and losing trades. Losing trades is part of the deal, man. It's all part of the deal. Do not get down on yourself when a trade or trades don't go in your favor. You can have the absolute perfect setup and still lose money on it. That's just the reality of what we do. Law number 11, the only thing that matters is trade execution. Being able to flow in and out of your trades without trading errors is more important than making money. I am going to say that again. I am a firm believer in that 100%. Being able to flow in and out of your trades without trading errors is more important than making money. You can disagree. That's fine. As long as you have a verifiable trading edge, the probabilities will work out in your favor if you can execute. The name of the game, folks, is execution. Law number 12. Do your best to trade with a carefree attitude. Don't get too high. Don't get too low. This is a marathon and not a sprint. Don't let that big banger of a trade or that loss get you either too up or too down. Okay? Realize, again, probabilities. You're going to have winners. You're going to have losers. It's all a part of the deal. Law number 13, trust the process. It's all about the process. The greatest college football coach of all time, in my opinion, is Nick Saban. Love him, hate him, I don't care. And again, that's just my that's my opinion. Nick Saban is all about the process. Does he get great players? Absolutely, because he has a great track record of getting results. But he would never, ever get results without the process. You can Google it, Nick Saban process. Just look it up. It's all about the process. It is critically important to fall in love with the process, as it is the process that will ultimately determine your success or failure. In other words, the person that is looking back at you in the morning when you brush your teeth is the one responsible for your success or failure as a trader. Okay? It's you. It's me. It's every other trader out there. We are solely responsible for pushing the buttons. Okay? We're a teaching and learning community in here. But we're teaching people how to do this, not do it. That's why we're not a call-out service, folks. Oh, you need to go in here, you need to do this. No. Now, you guys know me, I'll call out levels all day long. If you're still in calls, this is what I'm looking at. If you're in puts, this is what I'm looking at. That kind of thing. But we're not going to say, you need to get in here. We won't do that. Law number 15, trade A+ setups only and don't chase trades, as we're not dogs. You do not eat out of a bowl on all fours, on the ground, wagging your tail. You might, but you get the point. If you miss the move, wait for your next setup. Law number 16, your success or failure is 100% dependent on your ability to follow these or your own trading rules, laws, and process. It's on you, folks. It's all on you. It's on you. We're going to go to the trading process. The trading process, I'm going to check, see if there are any questions. Any questions so far? Any questions so far? Don't kink shame. Thanks, Knobs. So we've got a few questions so far, and that is fine. I just don't want to get too far behind. Can you scroll your screen down? I can, fast reader. I'm happy to do that. I don't have the PDF on the 4 stages. That's just webpage. Just Google that. Love the process, hate the game. You gotta love the game too there, Red. You gotta love the game. I will. I'm going to show you that, Jim. Funny you should ask. Can you post the rules? I will. Send me a DM. If you want my trading rules process, send me a DM. Last couple of days, we've had several Twizzler strike candles. Can you address this in the context of the 920 strategies along gold? I'm going to talk about that right now, Profits Reaper. That's all part of the deal. It's all part of the deal. Oh, you're on Law 12? Okay, TMC, I'll get back to that. Give me just a second. That is all part of the deal. You're going to find yourself every now and again, you're going to be in a really, really good trade. Let's say you're in calls and out of nowhere comes a massive candle that just destroys you. 4 years, ES lady, 4 years. Doesn't happen overnight. So that's just part of the deal. That's part of the deal. It just happens. What's the best way to trade against you when you're in profit? I'm going to show you that too there, JGB. It doesn't happen overnight, ES lady. And again, this is Thank you there, Chuck D. Thank you there, Chuck D. This is a marathon. This is not a sprint. This is a marathon. This is not a sprint. This is not a get-rich-quick scheme. All right. Okay, so I'm going to get back to Ghost Rider. I'm going to wait for Ghost Rider, see what Ghost Rider is saying. By the way, negative Ghost Rider, the pattern is full. Find it funny that 8, 9, 20, 20. Absolutely subjective. Yeah, absolutely. I use SMAs, by the way. SMAs. And again, probabilities. Oh, we don't want to go there yet. We want to go back here. So I'm going to show, you lost at law number 12. Here's law number 13 is trust the process. Law number 14, treat trading as you would any other business endeavor. I think I skipped that one. Law number 15, trade A+ setups and don't chase trades, as we are not dogs. And your success or failure is 100% dependent on your ability to follow these or your own trading laws, rules, and processes. Trading process. For me, the trading process starts in pre-market. I like to set my levels before the opening bell. I set pre-market high and pre-market low by drawing horizontal lines at each of these levels. I then look for 5-minute double tops and double bottoms. I then draw a horizontal line at each of these levels. As you will see, these levels will give you key targets throughout most trading days. These levels will act as support and resistance throughout the trading day. Okay? Now, I will tell you this. A lot of the time, I'll set pre-market high and pre-market low. And then I may have one 5-minute double top that I'm moving, so one other horizontal line that I'm moving throughout the day. If I'm in a trade, specifically, that's what I'm going to do. I'm going to mark out 3-minute double tops, 3-minute double bottoms, and see where the trade takes me. Now, always pay close attention to the 5-minute pre-market, is it will show the expected first move after market opens. So the 5-minute in pre-market. Leading up to pre-market, I'm looking at the 5-minute. If the 9 SMA is in blue, it should be if the 9 is over the 20. I'm sorry, the 9 SMA is in blue, the 20 is in red. Because the 9 is below the 20 going into open, we should only be looking for puts. And again, that's my opinion when market opens. So if we're heading down in pre-market, I'm only looking for puts because my 9 is below my 20. There's a good rule for you guys out there. If you're a 920 trader, if you're trading consistently below the 9 below the 20, look for puts. If you're above, or at least in the fishtail, this is the fishtail, the space between the 9 and the 20, then we can at least consider calls. Okay? All right. Now, because I execute all my trades on the 1-minute chart, I switch to the 1-minute chart before the market opens. Once the market opens, I'm paying close attention to what is going on with both the 9 and the 20, as well as price action, what price action is doing relative to the 920, and support and resistance. So this is what I'm looking right in here, folks. Here's my pre-market. It's going up. 9 is above the 20. Guess what? I'm looking for calls. I switch to the 1-minute open, then I wait for an entry. And again, going up, I'm looking for calls. If we're going down, I'm looking for puts. And again, generally speaking, that is generally speaking. Notice that trend reversals will become very, very clear by looking at the 5-minute chart. Higher time frames give you a different perspective on where the market is going. Always trust what the chart is showing you. Also pay close attention to the fact that pre-market levels will oftentimes be strong areas of support and resistance throughout the day. And again, always do your best to follow the trend. Follow the trend. Counter trend trading can be lucrative. I know a good friend of mine is a counter trend trader, and he makes an absolute killing because he's a sniper. He's an absolute sniper. But it's also important to realize that following the trend will help stack the probabilities in your favor. Trading is all based on probabilities. We want to be the casino and not the gambler. Now, there are several different setups within the overall 920 strategy. We have a conservative strategy, an aggressive strategy, a more aggressive strategy, and the double cross. I get questions all the time. Oh, that's a double cross. Do I take it? Do I take it? Do I take it? And we will get to that here in just a second. Conservative 920 strategy. I'm going to be talking about this here in just a few minutes. The 9MA or the SMA must cross over to the upside of the 20 SMA. And again, this is conservative. After the 9 crosses over the 20 to the upside, you're going to wait for that first green candle to close. Once that first green candle closes above both the 9 and the 20, we put on the play. So we're in calls. Pay close attention to where the candles are doing relative to the 9 and the 20. Now, once that first red candle closes below the 9, it's time to cut the play and take profits. If it's a fast runner, close your position into strength. Runners can reverse very quickly. While these are lagging indicators, the probability of a profitable trade is extremely high. What I will task each and every one of you to do is go back, if you're considering the 920 as a strategy, go back and look at every single one of your 920 crosses on the 1 minute chart. And from a conservative standpoint, or conservative strategy standpoint, I want you to figure out what the expected gain is every time you cross to the upside, and what the expected gain is every time you cross to the downside, and again, on the conservative strategy. I've done it, but I want you guys to do it. There's an expected gain every time it crosses up, an expected loss expected gain every time it crosses to the downside. Okay, probabilities, folks. Aggressive strategy. The strategy for opening a position is same with a conservative strategy. The only difference is you don't close when the first red candle closes below the 9. Instead, you wait until the 9 crosses over the 20 in the opposite direction. So you want that 9 to curl over to the downside first. It's a very, very aggressive play. Okay, super aggressive play. Now, what this is doing, why you are waiting for this to happen, is that says, okay, that play's over based on the 920. Now, if it's a fast mover, that can really wipe you out. So there's nothing wrong with conservative strategy. Conservative strategy works very, very well. More aggressive strategy, enter calls after the first green candle closes above the 9, but still below the 20. Okay? We call that a fishtail play, and I will show you. I'll get back to the fishtail play. We can see a fishtail play right here on this candle. That's a fishtail play. We are above the 9, but below the 20. Above the 9, but below the 20. We're in the fishtail. Now, what you're going to see often is this 20 acts as resistance. It will reject and recapture the 9, so be very, very careful. But again, if you've got your support and resistance lines drawn from those 5-minute double tops and double bottoms in pre-market, and again, go back every day and look at every day and see how these lines play out. But again, fishtail plays like that, either to the upside or to the downside, can be very, very profitable. Now, once you get across to the upside, that confirms that you're at least moderately in decent shape. Okay, so that is a very, very aggressive way to play that. Now, you can, if you play fishtail plays, you can use a conservative exit or an aggressive exit. Or, if you do like me, you can switch time frames. Look at your 2-minute, 3-minute, 5-minute, and then follow those along. 2-minute, 3-minute, and 5-minute will either keep you in plays longer or keep you out of trades. When I'm on voice, you guys will regularly hear me say, okay, I'm looking at the 2-minute or I'm switching to the 5-minute. This is what I'm seeing. What I'm trying to do when I do that, when I switch time frames, again, when I'm on voice, is I'm basically trying to say, if you are still in your position right now, this is what I'm looking at. And I did it for a very specific reason, because we're trying to follow the chart and allow the chart take us out of that play. So that will allow us to hold on to our winning trades potentially longer than you would normally hold on to those trades. And again, this is something that you just, it takes time getting to the level where you can hold your trades for any amount of time. Okay, the double cross. Double cross, as long as you're following the trend, it's a super high probability setup, as long as you are following the trend. Double cross happens when a candle opens below the 9 and closes above the 20. That's a double cross to the upside. Highest probability double crosses happen when there is less than 25 cents between the open and close of the candle. In other words, you don't want to take an 80-cent double cross, folks. I'm just telling you that right now. I mean, you can, but you better predefine that risk, and there's a lot of dollars involved in an 80-cent candle. So you can wait for a conservative strategy on that. You might miss the play, but again, that's just kind of a good rule of thumb. Okay, to go short, it's the exact opposite. The 9 must cross to the downside of the 20. After the 9 crosses the 20 to the downside, we wait for that first red candle to close. And again, we're going to pay close attention to what the candles are doing relative to the 9 and the 20. Once that first green candle closes above the 9, it's time to get out of the play. Again, conservative strategy. If it's a fast runner, close your position into strength. Runners can reverse very quickly. Aggressive, it's the same thing. We're in puts, right? We're in puts, so we're going down. So aggressive strategy says I'm not going to close out that trade until that 1 minute 9 crosses over the 20 to the upside. Okay? Super, super aggressive. What that does is, again, it will keep you into plays longer. You will give up a lot of profits, I'm telling you that right now. But that just says, you know what, this play's over. That's what it does. And again, my strategy, I'm not trying to maximize profits. What I'm doing is I'm letting the market tell me where to get in and where to get out. Primarily, I mean, both of those, but where to get out of the trade. And again, you can be conservative, aggressive, super aggressive, changing time frames, let it come way back on you, but that's how I play. But it's a 920 strategy. Trading plan. Here we go. This is essentially, and I'm going to check for questions right now. Questions. Close on the 1 minute. Yes, close on the 1 minute. Any questions? Any questions up to this point? We've been going for about 45 minutes. Anybody have any questions? Could be their JPM. Could be. I've done that 3 times. It only gets okay. SMA 9 and 20. Alex 9 and 20. What do you do when you get out of daily? Ooh, I'm going to show you what I do, Billy G. I'm going to show you. Draw lines from previous. No, I'm no longer looking at 5 minutes, man. I'm looking at 30s and 1 hours. Can we do a trade examples? Yeah, we could, but that'll take way, way, way too much time, and I don't want to be in here for hours and hours and hours. Better thing, Taylor Plus, is to be on voice tomorrow. I'll be on voice in the morning. If the 920 lines are flat, you wait. Okay. Excellent question there, man, Bear Pig. That's why I like to use those 5 minute double tops and double bottoms, because it gives me a range. It's confirmation candle 1 after the cross. After the cross. After the cross. Oh, so it can be that same candle there, Profits Reaper. You can get, and you can call it a triple cross if you'd like. That's the cross of the 9, the 20, and the candle on the same candle, the old triple cross. It does, but again, I don't want to be here all night. I know how much time I have allotted for myself. Time frame you avoid to trade with 920 to start trading very first candle, last candle, if you're free. And I'm going to go over the chart. And again, it's already printed. But again, I have losing trades all the time. So a time frame you avoid to trade 9. Oh, like a time frame during the day, Sing? Yeah, I like to go typically the first couple hours of the day. You're welcome there, 1-800-Lionel. First couple hours of the day. That is my preference. That is my preference. What happens when the move goes quick and then the 9 is really far? Ho. That's a great question there, Seb, because that happens all the time. It happened yesterday. I think it was yesterday or the day before. Maybe the day before. Massive run up. I think it was yesterday. I'm going to show you. But again, process. I got another question. Happens to me and I panic. Don't panic. You have a hard stop loss? Awesome. That's awesome there, Ghost Rider. That is awesome. Hard stops. Nothing wrong with that. The only thing I use mental stops. I didn't use hard stops because I don't want to get taken out by wicks. So, but again, you can always get back into the trade, right? Not there quite yet. I'm going to get to what I call the 20 trade challenge. Okay. Now, show of hands. How many in here have gone through the 20 trade challenge? The answer to that is Big Bass says no. I don't use futures lines. No, I don't use futures lines. I'm gonna talk about the 20 trade challenge here in just a second. I don't use the Qs. I don't use Apple. I don't use anything other than SPY. Again, I've got everything that I need. And again, that's just how I trade. Now the question is, how many people have had to start the 20 trade challenge multiple times, and it's okay? Failed on the 15th day. That is awesome, J Marv. You know why that's awesome? And that is awesome that somebody failed on the day 12. Good job. Good job. 5 times. Yes. 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 That is awesome. You know why that's awesome? Because you're not quitting. You're not quitting. You're going back to number 1, folks. I'm telling you, you gotta go back to number 1. If you're like, I broke my rules, but I'm going to keep on going. No, go back to number 1. I'm getting there, Ghost Rider. Here it is, 20 trade challenge. This is the trading plan. I will trade a single SPY contract following all of my rules. I will trade a single SPY contract until I can follow my rules for 20 consecutive trades. In the event I break my trading rules, I will start over at number 1. I will increase my position size to 2 SPY contracts upon successful completion of 20 trades in which I follow my trading rules and my trading plan. I will not worry about my P&L until the end of the 20 trades. I will see where I am from a win-loss percentage and my expected gain per 20 trades set. I will continue to increase my position size at the completion of 20 consecutive trades in which I follow my rules. On successful completion of trading 9 SPY contracts, I will move to SPX. You don't have to, you can stay with SPY. I will continue increasing my position size on SPX as long as I can follow my trading rules, plans, process. The time it takes to get to the different levels are 100% dependent on me following my rules. I will follow my rules for entries, exits, etc. The time it takes to get to the next levels are insignificant. It doesn't matter. The amount of money I make is insignificant. It doesn't matter. The only thing that matters is following my trading plan, rules, process. This is non-negotiable, and you have to have this with yourself. I will keep track of my trades with both a trading diary and a trade journal. Okay, so the trade journal essentially is I entered this position at this time on this date. It was at this, it went to this. Did I follow my rules, yes or no? The trade diary, you do that at the end of the day. Well, this is how the trading day went. I did very well today. I took this trade because of this. This is where you basically go in long form. Okay, so it's a historical perspective on where you are as a trader, where you have been as a trader, and it tracks your process in long form. You're going to look back at it on 6 months and go, man, I have come a long way. I've come such a long way. And again, it'll allow you to put your trading thoughts into long form. And again, the trading journal will allow you to look at the measurable aspects of trading. Profit and loss is the least important part of your trading plan. Yeah, don't at me. I get it. Don't at me. Because the only thing, again, that matters is trade execution. In order to be a successful long-term trader, I must and will commit to this plan. Okay. Change the left. Start again. Nail it for 15 days. Great job there, J. Marv. Delta. I like 0.5s and better, but it just depends. Challenges for 20 trades, not 20 trade days. No, we're not going to do a different room there when it heard Lionel. Well, link for the 20 trades. Borgie, send me a DM. Send me a DM if I haven't sent it to you. I haven't sent the snapshot to Paul, too. Thanks there, J. Marv. That is awesome. You guys are killing it. You guys are absolutely killing it. So again, I say that your P&L doesn't matter because ultimately it doesn't. And again, you're like, it's got to matter. It's got to matter. Well, we're not relying on a trade-by-trade basis to make money, right? We're looking at it over a series of trades. 100%. 100%. That's a successful trade. It is a successful trade if you followed your plan. If you followed your plan and lost money, that is a successful trade. That is a good trade. 2 enthusiastic thumbs up to you. There you go, crossover gang, right there. There you go. But again, we're not going to split rooms, guys. We're not going to do that. Okay, back to the trading plan. Other considerations. The purpose of any trading plan is to get you in and out of your trades at precise times according to your own specific trading, your own specific strategy and trading rules. This can be accomplished only if and only if you have a well-defined plan and rules. If you follow these things, you will be successful. And again, position size is very important to keep your position size small while you're in the learning stages of trading. My recommendations, again, single contract, boom, boom, boom. Critical tactic. Once in a trade, it's imperative that you only watch price action and not the value of your contracts. Question about stop loss when a trade goes against you right when you enter. You get out when the next candle closes below. Yes. 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 Absolutely, positively. I call that the ignition candle JPM. It's 20 trades, not 20 days. I don't care how long it takes. Okay. For the folks who have success, it took me 7 weeks to go through it, by the way, guys. 7 weeks. Close, JPM, close. Candle closes. Unless it's a wild candle, mark it the hell out. It took me 7 weeks to go through that process. Single SPY contracts. Phibbs was here. He remembers. There's other people in here that remember of me going through my process. I was there every single day. It was every single day. Why aren't you increasing your position size? Well, I started with one. It was a single contract. I could trade a whole hell of a lot of contracts, folks. I'm telling you that right now. That was not the issue. Yes, Lee, you can do whatever you want, but no, because there are no emotions involved with paper trading. And again, my opinion. I'll get into that here in just a second. Thanks for bringing that up there, Spy. My opinion is you use paper trading to learn how to push the buttons, okay? Learn how to push the buttons, develop your strategy, that kind of thing. How many trades a day do you do on a... I'm Pdaddy, Veronica. I am Pdaddy. Question about stops. I'll answer that here in just a second again. But go to real money. Trade 3 or 4 spots out of the money if you have to. Again, we're trying to execute. We're not trying to make money. Premium on this about Jimmy's videos taught me that you will not get rich in one day. Thank you. Thank you. And that's the point I was just trying to make right there. Ghost Rider, you made it right there. When you are in a trade, if you are watching your P&L, if you're watching your P&L, you know what you're going to do? You are going to, number one, if you're in a losing trade, you're going to turn off your P&L because you're like, oh shit, it's got to come back and get me. But if you're in a winning trade and you're watching your P&L, you are going to close out of the trade. 2 weeks ago tomorrow, I was in SPX calls. I bought them for $6.50 each. $6.50 each. Okay. The trade was a winning trade. It was running like a striped ass ape. It was awesome. And I looked at my P&L and I closed the trade. It was a banger of a trade. It was an incredible trade, 4.5 times. But I broke my trading rules, and I was absolutely disgustingly sick about that because I broke my trading rules. And if you guys were in voice at the time, you remember it, and it was horrible. It was horrible for me because I broke my rules. I pride myself on following my rules. So I didn't trade the rest of the day. And the rest of the day was a banger. I'm telling you, the rest of the day was a banger. I saw a lot of entries. But I broke my rules. I stopped trading that trading day. If you break your rules at any point during the trading day, do yourself a favor. Put yourself in a self-imposed timeout and no longer trade during the day. Okay, so no more trades. You put yourself in a timeout and then start over. You also play one spot on money like Jimmy does. Yeah, generally speaking, that's what I do there, Mr. V. I used to do what's called a delta multiplier, but I would do that on non-expiration days. But I don't play delta multipliers anymore. I just go SPX. Okay, get whipsawed. Yeah, yep. Execute on the one, then switch to time frames. Yeah, I'm going to get right back to it there. ES Lady, there we go. And again, this is the critical tactic. Once you are in a trade, it's imperative that you only watch price action, not the value of your play. This will keep you from getting too emotional during the trade. As it gets closer to your target, crossing in the opposite direction or a specific line of support or resistance, however you play, then and only then should you look at the value of your trade. Advanced tactics. While we execute on the 1 minute, we can also look at the higher time frames. I do this on every single play. 2, 3, and the 5 minute to keep us in the trade longer than normal. Higher time frames can also keep you out of trades. Now, when trading with this tactic, always be aware of where your support and resistance lines are located. Old support and resistance are excellent targets for your trades. And because the market has a memory, assume that those areas are strong levels at which to take your profits. Again, have a spot, have a reason. You have a reason for getting out of into the trade. You should also have a reason for getting out. There's a reason to get in, have a reason to get out. Anxiety monitoring. I started this almost 2 years ago because I wanted to know where my anxiety level was when I was in a trade. Didn't really have this problem when I was trading stocks because, it was a slow mover and you can have a big position. And it's still a relatively slow mover. Once I get into options, it's like, oh man, these things move pretty fast. So I wanted to check my relative anxiety level. So I have an Apple Watch, which works very, very well for me. I started monitoring my heart rate. And again, that was all part of that 7-week process where I wanted to get my heart rate into a manageable range when I was in a trade. And so couple things that helped me. One thing in the morning I do every single day is I meditate. I meditate for at least 10 minutes, sometimes 20 minutes. Any meditation will do. I do transcendental meditation. That's typically a 20-minute deal. But there are plenty of YouTube videos out there. You can do a self-directed meditation. Doesn't matter. But I do that every single day. It just kind of gets me into that calm space that I enjoy. Think about transcendental meditation. Is somebody going to charge you a whole bunch of money to give you a single word and teach you how to meditate? It's pretty simple, though. Now, if you find yourself getting too anxious while you're in a trade, take a few deliberate breaths. You guys are in here all the time. Folks, if you're in this trade right now, what I want you to do is I want you to take 3 deep breaths and relax. And another thing I say regularly is we are only watching lines on a screen. That's all we're doing, folks. We're just watching lines on a screen. Bingo. Yes, that's right. Ghost Rider. Nailing it. Nailing it, brother. So the question was, so that still counts as one of your trades. Are you talking about a losing trade? Yeah, it absolutely counts. Yeah, it counts as a good trade. You followed your rules. You followed your rules getting in. You followed your rules for getting out. Give yourself, again, a check mark. 2 enthusiastic thumbs up. Here we go again. Anxiety monitoring. Anxiety monitoring. So that's pretty much it on the strategy. And one final thing that everybody needs to remember. Well, backtesting. I'm not there yet. Backtesting. You have to backtest your strategy, folks. You just have to do it. We've already talked about the trade journal and how important it is to trade journal. Mental side of trading, we've already talked about this. We've already talked about this early, okay? We've already talked about this. I had a conversation with one of our traders, who shall remain nameless, almost 2 years ago. I will never forget this conversation. I said, do you believe that you are worthy? Do you believe that you are worthy of everything that the market has to offer you? And if you believe do you have a specific dollar amount that you think that you're worth? And this person gave me a dollar amount. And I said, that's as much money as you will ever make in the market. That's as much money as you will ever make in the market. So you must believe that you are worthy of the financial benefits, the rewards that the market has to offer. Self-limiting beliefs will absolutely destroy your future trading process, or progress rather, or prospects. And this is true with anything in life. The ceiling that you put on yourself is the only ceiling that you have is the ceiling that you put on yourself, folks. I'm telling you that right now. You must trust, believe, and know you can do this. And again, trading is the most difficult money, or the most difficult, easy money you'll ever make in your life. Before we get to the charts, you got this. You guys can do this. You can do this. You have inside of you the ability to do this. Well, Ani, all right, so, Ani, would you trade 9:20 1-minute chart all day, switch to 2-minute, 3-minute entries? I am going to show you. So that's why I like to trade for the first couple of hours there, Ani. That's why I like to trade the first couple of hours. Right? I thought, a friend that likes to gamble, tell them to play earnings. There you go. I like that. I like that. I like that. Take that quote and post it in your room. Be my guest, my friend. Be my guest, my friend. Don't know what room you have, but hey, take anything you'd like, my friend. And again, we're a community. We're trying to spread the gospel of the good word of trading, folks. That's what we're doing in here. Jimmy plays line to line, but the 920 strategy seems to say hold longer until the chart tells you to get out. Okay, Profits Reaper. Yes, we are different styles of traders. We're different styles of traders. So consequently, he's going to have different spots to get in trades, get to different spots to get out of trades. The one thing that I would ask every single person in here to do, particularly new people, use one strategy and one strategy only. I don't care what the strategy is. It doesn't matter what the strategy is. One strategy and one strategy only. And it can be one tactic within the overall strategy. As a matter of fact, I suggest that you use one tactic within the overall strategy when you're first starting out. Okay? Again, you're trying to execute. If you're trying to combine strategies or make hybrid strategies, if you're trying to do that, that will destroy you. That will give you mixed signals along the way. Do I get in? Do I stay in? Do I get out? What do I do? So do not combine strategies. And again, that is my opinion. Best medication, break your leg below the cartilage out of your knee. Exercise, physical therapy, plenty of time to meditate and train studying for 2 months. Oh, okay. Well, Borgie, below the cartilage. Okay. Yeah, I'm sorry about your broken leg there, friend, but, and you can, and again, use whatever strategy you want. Can we use 920 with Jimmy's lines instead of the ones? You can use any lines you want, Rumi. Personal opinion, have a target. If it hit, get out. Use 920. And again, Ghost Rider, and that's fine. There are plenty of people that take positions off the table. I'm the guy that never takes a position off the table. If it's good enough to stay in, it's good enough to. If it's good enough to be in, it's good enough to stay in. If it's bad enough to get out, I'm getting out. I'm taking my whole position off the table, and I'll put on another trade. But again, that is just my opinion. But I appreciate your opinion. That is common. I come from kind of the Tom Hugard school of trading. That you're either all in or all out. And again, that's just my opinion. That's just my opinion. It's not right. It's not wrong. It's just different. Don't use the BB strategy. What's the BB strategy? Oh, the BB indicator? I don't know what the... Oh, bounce around. Oh, yes. Okay. All right. I got you. Have you averaged? Yeah, I've added my positions. Absolutely. I don't do it enough, but I have absolutely done that. Absolutely, positively. So basically, Tom Hugard says you don't average down on your trades. If you're in a winning trade, you average. You put more money into it. Averaging up is where you're in a winning trade. Most people take positions off when they're in a winning trade, but you actually add to your position. Yeah, we don't want to do that. We don't want to go in and out and in and out. You want to add to your position. And again, when the market is saying yes, you have to listen to the market. Figured out how to put stop losses on paper on Webull. No earthly idea there, Borgie. Couldn't tell you. Have no idea. Are you kidding, Ghost Rider? Averaging into your plays when you're in a winning trade? Most people take their position, they take half off or a third, and a third. That's Mark Douglas, Tom Hugard. Listen to Tom Hugard. add to your position. Market's saying yes. Listen to the market. It's awesome. It's awesome. It is awesome. It'll change your life, man. I'm telling you that right now. But again, they're just different strategy. It absolutely works. When the market is saying go, you go. You just have to go. All right, folks, here we are. We're going to do a little bit of chart time here. We're about an hour and 10 minutes into this right now. So far, if you're buying one contract, then you add another when it's moving in that. Yes, that's exactly what you do, Bill. But Billy, if you're still in that 20 trade challenge, you do not want to add to your positions. You want single SPY contracts. Okay? All right. Fair enough. And again, when the market says yes, you have to listen. You just absolutely, positively have to listen. All right, folks, here we go. This is today. That's today. That is after hours. So what we're going to do, we're going to start our trading day by switching to that 5-minute chart. 1, 2, 3, 5, 15, and SPX. These are the tabs that I have. I am staring at one screen only, folks. Actually, I'm staring at 3. I am watching, it's 32-inch monitor. I'm watching the 1 minute, the 2 minute, the 3 minute, the 5 minute, the 15, and SPX. That's all I'm watching. I don't watch Qs. I don't watch anything else. I don't watch futures. I don't draw futures lines. I don't watch anything else. And again, that's just my style. That is just my style. Okay. Oh, that was SPX. I just deleted some lines on SPX. That's just fine. So what I'm going to do every pre-market, I'm going to go to my 5-minute chart. There is my 5-minute chart. Make this a little bit bigger so I can give us some pre-market. There's pre-market on the 5-minute. What I'm doing is I'm looking for pre-market low. So I'm going to chart that pre-market low. There it is right there, pre-market low. I'm going to look at pre-market high. And these lines are going to be pretty close. Generally speaking, I'm paying more attention to what happens in the later hours of pre-market, although the early hours do matter. But I've got all of this noise around in pre-market right in here. So I'm not going to draw a bunch of double bottoms. I'm just going to take that one and put it right at this level right here. I'm also going to come up to this level up here and see what it does right about there. Now what you guys are going to find is throughout the day when Jimmy and I are on voice, our lines are really close together. So he derives his lines differently than I do. Okay, we're in pre-market.
I found this on the web.
Thank you, Siri. Pre-market, our 9 is above our 20. And again, these are 5-minute candles, 5-minute candles. What are we looking for at open? What are we looking for? I watch SPX, absolutely. Widen the lines. No, this is a SPY chart. This is a SPY chart right here. This is SPY. There's no pre-market on SPX. So this is a SPY chart, 5-minute chart. 5-minute double tops, 5-minute double bottoms. I could probably put a line somewhere around in here. Let me go ahead and do that too because it is a pre-market line. I'll put it right about there. Okay. These are all the lines that I have. Now again, throughout the day, once we get into open, I might leave these lines up. Sometimes I will, sometimes I won't. I also use something called volume profile. For all you volume profiles out there, profile users out there, it gives you, let me see if I can find, there's volume profile on the 4-hour chart. There's volume profile right there. That's called the POC, point of control, point at which most shares have been traded during the trading day. I look at it on the 1 minute. This is on the 4-hour right now. But I look at it on the on the 1 minute. Okay, so we're back to the 1 minute. This is again pre-market. We've got our high, we've got our low, we've got our double tops and double bottoms. Okay, so I'm looking for a breach of this 431.42. Guess what? We wicked up to it. And then we just started moving down. I think we did take a position on this second candle. I don't know if we got... No, we didn't. No, we took puts. We took puts because we breached the 9 back to the downside. This is called a confirmation candle back to the downside because in pre-market we are running down on the 1 minute. Running down on the 1 minute. We recaptured the 9. We've got our 9 right here. We wrote it down. We didn't close out. I actually didn't close out this trade until right here because I breached to the upside. It was a decent win. Wasn't anything great, but that's where I closed out that trade. Now, when you're in puts, again, the 9 is the blue. This is your resistance. We're using the 9 as the resistance on the way down. We're using the 9 as support on the way up. This is my 20. I'm going to turn off my 20. There you go. There's the 9 strategy right there. You don't even have to use the 20. Look at that. We breached the 9 back to the downside. Cruise along, cruise along, cruise along. We breached that back to the upside. Guess what? Files along. Back down, up, down, up, down, up, down. I'm going to turn that 20 back on because it looks kind of naked. Where is it? There we go. There's our 20 once again. Okay, again, I use support and resistance. 5-minute double tops and double bottoms. This will give you spots to enter along the way. We took this play in here also. And I can tell you specifically why we took this play in here. Because, again, we had this 5-minute double top or a double bottom up here in pre-market. Doesn't matter if it's double top or a double bottom. I'm still right or using the line. If you are in calls, you want to pay close attention to your levels. If you're in puts, you want to pay close attention to your levels as well. You always want to pay close attention to your levels. Here we go. We got into puts here because we had what? What is this candle right here? 1016, folks. 1016. Why is this a good candle right here? 1016. What did that candle do? What made that candle so good? Here's what made that candle so good. Number 1, we failed to breach a line. We breached this line. We tested this line of resistance. We breached this line of resistance. Came back down, fell back below that line. Then we got 3 things that happened. Actually, 4 things happened on this candle because the POC was right around in here. POC point of control. We had basically a golden cross back to the downside. A golden cross happens when we cross the 9, the 20, the POC, and the VWAP on the same candle. You can use that as a golden cross to the downside or a golden cross to the upside when it happens back to the upside. Okay, so we had one right there. Actually lost money on this trade because I took calls right here. Whoops. But we did enter and rode this thing down and turned it into a really, really nice trade. One of our other members, I was actually doing a kind of a, not necessarily a private voice, but a couple of our members here wanted to do a, just get on and watch the 920. One of our guys lost a pretty decent amount of money starting off, didn't close out, and then missed this trade right here. Missed this trade. But at any rate, that's a golden cross back to the downside. Golden cross to the downside. And again, the golden cross to the downside is we fail to we breach a line of resistance. We turn that back, or a line of resistance. We think it's going to be support, so we breach that line of support. We breach the resistance, becomes support, breach that line of support. Comes back down, we get the double cross or the golden cross back to the downside. And again, it's an aggressive move. The more aggressive play would be on this candle right here. But again, I'm not taking that candle ever, ever, ever. You can if you're going, back down to if you're more aggressive. Golden cross. We crossed the 9, the 20, and the VWAP on the same candle. I know the POC was in this area too. So we had the 4 things that happened on that same candle. And we failed to breach this line of resistance and hold above this line, becoming, and we breached it back to the downside. So we failed to breach, came back down, wrote it down. Again, this is your 9. The blue is your 9. Okay. Where do we close the trade? That's the question. Where do we close the trade? There are multiple spots. Yeah, a minute. On what circumstance would you enter before the cross? Yeah, I'm going to go over that. Hoping to watch the recording and catch everything. And that's fine, yeah. Yes, at the break of 9 or resistance, absolutely. When the 9 gets close to the 20, it's called... What's it called, folks? It's called a fishtail play. It is called a fishtail play. That's a fishtail play. So we have multiple spots to exit on this trade. Okay, we can close once we breach this line. But again, remember, folks, this is a line in pre-market. We breach it back to the downside. We tried to get down to our 427.64. Again, pre-market line still sitting there as support. We didn't get down, so we breached this line of resistance to the upside. We're going to assume that line is support. So what we're going to do, and again, you can close out anytime you want. It's your money. You've got the lines here. You can use the SMA to get back out of the trade. You can close out at this 1035 candle. That's fine. You're giving up a lot of profit, but again, what we're doing is we're letting the chart tell us when to get out. The chart's telling us to get out on this candle right here because, again, we breached this line. We're breaching it back to the upside. It's a spot to get out right there. It's a spot to get out right here. The last place you want to get out is when you cross this 920 back to the upside. It's basically saying, at least for right now, the play is over. So we get a 920 cross in the opposite direction of our play. That's the last place we want to get out. Again, it's very, very aggressive. That's the last place you want to get out. This is our bad period in here, but I'm going to switch to the 5-minute and show you what the 5-minute was doing in that area. This is the area that we're talking about. Look at this. We're not really getting a whole lot of juice in here. Not getting a whole lot at all. And again, 5 minutes. These are all pre-market lines. I haven't done anything to adjust the lines throughout the day. We came down on this one. We made a 5-minute lower low, but it got snapped right back up. Could you take those puts? Absolutely, because you breached this line of resistance. You can play every single cross out there, folks. You can play every single cross out there and follow the rules and you'll make money. Period. You can play chop and make money. I'm not saying that you're going to make money in the chop. I'm not saying you're going to make money in the chop. You're very, very likely going to lose both ways in chop if you're following the 920 strategy. But you never know when it's going to get out of the chop, so put on the play. Again, you're going to probably take a loss. Actually, you never confirmed into this trade. Let's see, did we confirm into this trade? Yep, we did. We confirmed into this trade. Right on this candle, you're going to lose money on this trade? Yep, so you lost money on this trade. Are you going to lose money on this trade? Well, let's see. So we cross to the upside. Well, technically you can take this trade right here, but you probably don't want to, only because we didn't breach this level up here. So you're not going to put on that trade. You're going to take this double cross down? Yeah, you can take that double cross back to the downside. See if you can breach this level, go down. So you probably make a little bit of money on that trade because you're probably not going to close out till you breach this line of old support becoming new resistance. You breach that resistance back to the upside. You might close out on this candle. You might close out on this candle. So you're going to lose money. You could go 0 for 3. You could go 1 for 3. You could go 2 for 3 on these plays on every single cross. Again, you can play every single cross that the market gives you, folks. Yesterday was tough. Yesterday was tough. There were some good plays. I don't think there's anything wrong with the screen that I'm seeing. I mean, obviously I'm looking at my own screen, so it doesn't matter. The point is, switch your time frames. See what you're looking at different time frames. There's your 3-minute. I love the 3-minute candles because guess what? If you follow the 3-minute or the 5-minute all day long, you're probably not going to take counter trend trades. 3-minute, there you go. There's your 3-minute right there. You're staying below. You're not closing. You're closing above, but you're still below that 20. You're not taking counter trend trades on the 3 if you're trading the 3 and waiting for that 9 to cross the 20 to the upside. And again, don't believe me on one day. Go back on every day. Go back on every single day. Look at the 920. You can look at the 5-minute. There's your guidepost. That 5 is your guide. Look at the 3-minute. You can look at the 3-minute. That can be your rule. If we're trading if the 9 is below the 20 on the 5-minute, I'm only looking for puts. If the 9 is trading over the 20 on the 5 minute, I'm only looking for calls. You can use the same thing for the 3 minute time frame. Look, it works. It works on every single time frame. And again, there are nuances to everything that we do in here, and those nuances can only be learned over time. It takes time, folks. Time is what we have. That's all we're looking at. I don't know why I have BB levels up here. I'll turn that off. Play every cross. Play every cross if you want to. Okay, so yeah, it helped Ghost Rider. Can you give a quick example when trade moves quick in the 9? Yes, I'm going to sub. I'm going to, because this particular thing happened. It was either yesterday. It was Tuesday. Yep, there it is. This is the play that you're looking at, isn't it? Oh, no. The 9 is a long way away. Oh, my God. What am I going to do? I'm going to close it out because it's going to come back and it's going to slap me. That's the one you're talking about, isn't it? That's the one that everybody is looking at. What do you do when the candles get so far away from the 9 that anytime it could come back and just destroy me? Well, you can do one of two different things. You can close out your trade and wait for your next spot to get back in. Or you know that the 9 is always going to catch up. So one of two things is going to happen. Either we're actually going to come back and catch the 9, or the 9 is going to come back and catch up to us. And that's precisely what happened on this play right here. And it happens all the time. You're going to catch the 9 one way or another. Sometimes it's going to be in your favor. Sometimes it's not going to be in your favor. You have to determine on your own how you're going to play that specific strategy. Okay, so again, it's all on you. There was a question earlier about how I establish my lines once I break out of pre-market levels. I would be happy to do that. So what I'm typically looking at, let's see here. So generally speaking, I'm looking at the 15-minute candles. Okay, so 15. If we breach a level high or a level low, what I'm doing is I'm looking for 30-minute. Then I'm looking for 1 hour time frames. And then I'm looking at double tops and double bottoms on those 1 hour time frames. This is our pre-market low right in here, 428.64. So what do? I'm going to look at this next one down, 428.25. Boom, boom, boom. I had a very, very aggressive line down here at 427.39, and even more aggressive line that I never thought we'd get to at 426.47. 426.47. This is on the 1 hour, so I'm looking at double tops and double bottoms. I think I had this one also. 427.13, cruised right on through it. So I'm looking for double tops. These are demand zones. Essentially what I'm looking for, folks. I'm looking for big demand zones. You got to demand for shares at these levels. And again, this was a pre-market level, but nevertheless, I still look at them because all zones matter. Demand zones are low, supply zones are up top. So that's how I look at that. That's what I'm looking for. And again, the 9's either going to catch up with you or you're going to catch up with the 9, either way. Screen is frozen. Sorry about that, Spy Dalf. 9 SMA. Yes, exactly. 100% there, Ghost Rider. Does anyone know how to fix the zoomed in screen share? Have no earthly idea. Does the big leg up? Well, yeah, I'm not even looking at those lines anymore. And again, a lot of the times I'll kill all of my lines. I will just not even use any of the lines. I know intuitively where those levels are. And again, that was Tuesday. So I know intuitively where those levels are, so I will kill everything. So a lot of times, because I'm a 920 trader, and I use the 9 as support on the way up, and I use it as resistance on the way back down. That's my support and resistance. If I have my lines up and I'm using, 9 as support, 9 as resistance, it can create a bias. It can create a bias. You should know where they are, and you're going to know where they are just by watching price action. And we have to be able to look left, but it can create a bias. It can absolutely create a bias. Yep, old support becomes new resistance. 5 minute, Rumi, 5 minute. How long do you let a channel? Okay, so big bass. If it's early in the day, I'll sit through some chop, because again, I'm looking at what I'm doing on the 5 minute. If I'm sitting in chop at a specific level like we were today, I'm gonna switch back to that 5 minute. I'm gonna give you guys a level, 428. I think 428.17. 428.17. Let's see how close I am to that level. Boom. Let's see what we can do right here. 429.14. I think I had a 429.17 earlier where I entered calls and caught the move back to the downside late in the day. So in this situation right here, I'm looking at 5 minute double tops and double bottoms. That should be at about 55 from what I remember. So there we go, 55, 56. So you're bouncing around in this level. You're getting destroyed in this level. So I was looking for this 5 minute close, or I was looking for at least a higher time frame than a 1 or 2 minute close. And look what we got right here. We got a 3 minute close below that line, that 5 minute that I'm looking at right in here. Boom, boom, boom. We got our 3 minute close, and I rode that thing down, and it was a banger. It was really good. That's why, again, I'm a big proponent in looking at higher time frames and waiting for higher time frame closes to either keep you out, get you in, or keep you in a trade longer. So there we go. I think it's just magic, man. I don't know how I do it. It's just what I have up. Even works on the 15. There you go. I don't know. It just does it. I'm on TradingView. I've got I think premium on TradingView. Yeah, TradingView Premium. But it should work for you too if you have the app. 0 DTEs late in the day. Yes. But I use different pages on TradingView instead of shortcuts for different time frames. It's just what I use, Sam. It's just what I use. On E, it is called Volume Profile, KV4 Coins. KV4 Coins. It's not on my end. No, I've got a really strong signal, and I'm on fiber, so it's not on my end. I don't think it's on my end. But at any rate, I am recording this, so I will post it. Okay, so it's good there. Yep. Okay, very good. So again, when you guys hear me on voice during the day, you regularly hear me say, I've got a double bottom on the 5 at this. I'm looking to breach on a higher time frame on the 3 minute or the 5 minute. Okay, what I'm doing is I'm doing a couple of things. If I'm in a trade, I'm talking to myself. If I'm not in a trade, I'm talking to everybody else. Okay, talking to everybody else on the reasons to either stay in the trade or stay out of the trade. That's why I use those higher time frames. Okay, that is why I use the higher time frames. Okay. Questions. Show us value profile in POC and indicators. I will. Okay, so let's do this. Here's the easiest way to show you volume profile right now. What we are going to do is we're going to go to ES. We're going to go to futures. Futures on the 1 minute. Boom. There's your futures on the 1 minute. This is volume profile. This is your POC. This is the point at which most money has traded hands. On the 1 minute. You can switch time frames. That's the POC on the 5, way up top. But there it is on the 1. Price tends to rotate around the point of control, or if enough volume is generated, the POC comes back to the POC comes back to the price action if there's enough volume. If you are watching volume profile during the day, you will hear me say things such as we are getting into a thin volume area. In areas of thin volume, price can and often does move very, very quickly because there are fewer positions being defended either on the long or the short side. Volume profile right here. So these are thin volume areas, but these are futures, and there's just not a whole hell of a lot of volume. 108 contracts right now on that 1 minute candle. So just not a whole lot going on. So there's not a whole lot of developed volume in this area. Okay, but in areas of thin volume, where you see this blue, where you see the blue's the volume, the black is the thin volume. In areas of thin volume, you can see potentially much bigger moves. Okay, so we tend to move from areas of high volume to thin volume back towards high volume, whether that's down below or above. And what you're going to find is throughout the day, those areas of heavy volume are also going to go or coincide with what levels, folks? What levels? What levels are those high volume areas going to coincide with? Yes, knobs, support and resistance. Support and resistance. That's right. That's where the volume is, folks. And again, we're searching for buyers low, we're searching for sellers high. That's all we're doing, folks. We're looking for buyers and sellers. We're trying to find fair value in the market. That's what we're trying to do. It's an auction. It's just an ongoing auction. Crossing both 5 and the 1 minute in the same direction. Not necessarily, Deuce. Not necessarily. That is preferred. That's preferred. Only have symbol, interval, crosshair, time, and date range. Let's see. Click on this. Where is chart name? And again, I don't know that. I don't know that. But anyway, this is a thin volume area. I should have opened up the whole screen. It's a heavy volume area, folks. Sorry about that. I should have expanded it all the way out. Heavy volume. If we can watch this for a couple minutes, let's see if we can get up past this volume shelf right here. You'll hear me talking about volume shelves. See, this is a relatively heavy volume, thinner here, much thinner in here. If we can breach this to the downside, let's see if we can run down, back down to the bottom of this wick right here. Consequently, if we can run up past this, run up back here. But again, we're below the 9. We're below the 9. Again, you can use the 920 strategy on anything. You can use it on shares. You can use it on futures. It doesn't really matter. Again, got down to that shelf right there. So anyway, there's volume profile. So there you go. I have the premium subscription. I didn't even know there was a premium plus. Premium. The highest level. I bought on sale about a year ago, and it's getting ready to renew. It's set on auto renew, so I'm going to have to finagle with them to get another discount. Do you still wait to close your trade if a really big candle forms breaking the 9? It just depends. If I get one of those candles that's going to take me out like a big old Shrek or a big old Twizzler, yeah, I'm going to mark it out of the order. Yep. That is the old FU candle. Do you count double tops and double bottoms from previous days? Nope. I'm not really interested in those TMC. Unless we break out of a level that I'm looking for 30-minute double tops and double bottoms. And again, you are free to use whatever you want, but this is how I do it, folks. This is just how I do it. You can do it any way you choose to do it. It's how I trade. Okay, we've been going for about an hour and 40 minutes, so I'm going to open this up for questions. Did you see my question? Well, let me click on it. I'm sorry if I want to add my chart. You're talking about volume profile? It's called volume profile KV4 coins. Volume profile KV4 coins. Chart on the right side of the screen. Like that? Are you talking about volume profile? Is that what you're talking about on the right side of my screen? I don't use the orb. Never use the orb. That's Fibs. Fibs uses the orb. I don't play the orb. Here's say you may jump on a pullback to the 9 versus getting in at the cross. Any examples this week? Hold on. Heard you say you may jump in on a pullback to the 9. You know, the cross. Any examples? Any examples this week? Cross, double cross. That looks good to the naked eye. Yeah, they're all over the place. You get false breakouts all the time. Where again, I took a trade earlier today, and it didn't work out. Took a couple of trades that didn't work out. I had my cross to the upside on this candle. I took a position right here, 1014. It did not work out. This was a losing trade for me. Because I had a cross to the upside. It was a double cross. I didn't take it. Cross to the upside, my rules specifically state I got the cross here on a red candle. That's fine. I wait for my first green candle to get out to close before I enter the trade. And again, we had a line of support or resistance right here at about 431, somewhere right around in here. I put on the trade right here, closed out pretty quickly because boom, it just shot way down. So that was a trade that didn't work out. There are trades that don't work out all the time. That's okay. So we have to be able to take those losers, and you have to be able to accept those losers. Just like Tom Hugard says in Best Loser Wins. You have to be able to lose. And you have to be able to lose without feeling the pain of money evaporating from your trading account. You have to be able to do that. You have to be able to trade without emotion, or to take as much emotion out of it as possible. We're never going to be able to remove all emotion. We're human beings, and we are subject to normal human emotions. But if we have a plan that says if the market does this and I'm going to do that, and you execute according to your plan, whether you win or whether you lose, you made a good trade. What we're doing is we're setting ourselves up. Here's what we're setting ourselves up for, folks. These are the trades that we're setting ourselves up for by executing on our plan. These are the trades right here, guys. These are the trades. These are the bangers. These are the trades that say the market is saying yes, 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 yes. That is a, let me see, 33 to 30. That's $5 move. Are you kidding me? And then it went back down? These are the moves that if you execute every single time your edge presents itself, these are the moves that we're looking for. These are the home runs. We hit those singles all day long. We get those, 50-cent move, 80-cent move, dollar move, 40-cent, whatever that move is, whatever the market gives you. But because we've executed on the winning trades, because we've executed on the losing trades, because we've trained ourselves to execute when our trade presents itself, we catch these trades. These are the trades that we're able to catch. These are the good ones, folks. These are the good. Until you have caught a trade like that, when you catch one of those trades, that first time you catch, how many in here have caught one of those trades before? A $4, $5, $6 move. How many of you have caught those trades? Why? Why? That's the question, why? Billy G, nail it. You always exit too early. And that's fine, JPM. Follow your plan, man. Whatever your plan is, Santos. Nailed it. Nailed it. It is about what we were talking about. It was about what we were talking about earlier today, folks. It's the fear. And Joe, trade line to line. Do your thing, my friend. Spydelf, you've held those losers that long before. Why in the hell are you not holding your winners? It's fear. We talked about that early. That's one of the first things we talked about. Hope and fear. You fear that you're going to give money back to the market. You fear that you're going to give money back to the market. We take these trades right here, folks. We take these trades because our edge is present. Our edge presents itself. We put on the play. We get knocked out of the trade. Oh, we lost money. We take the trades. We lost money. Oh, we made a little bit of money. Oh, here's a dollar move. Here's a 50-cent move. Oh, we lost it. Moved 50 cents against our position. We take these trades right here. We take these base hits. We take these strikeouts, these groundouts, these flyouts. We take all of these trades when our edge presents itself so we can catch one of these. We execute our plan so we set ourselves up for the market saying yes. The market said yes. Look. There's the 5-minute chart. Look at that 5-minute chart. Look at that. It's a $5 move, maybe a $6 move from the very big, from the very bottom. We take those losses, we take those small losses, we take those small wins in order to set ourselves up for those big wins, folks. Have you ever noticed 920 cross in 1-5 time frame? Yep, it happens every now and again. It is absolutely increased probability, Byron. You go line to line, I held once, wiped out my profits. So you fear. And again, silent listener, whatever your plan says to do, you have to execute on your plan. What indicator? Support and resistance, just lines, ES lady, just lines, just draw your lines. Sometimes I trade the SPX chart, absolutely. When doing 20 trade challenge, do we have to worry about wash sales with SPY? Yeah, you do. But again, you're not trading big numbers. You switch your subconscious from fear of not winning to fear of losing, and hope of a loser comes back and hope. Yes, we're just executing a plan, Joe. That's all we're doing. Do you wait only when they are on the 5-minute? No, I'm executing on the 1, but I'm always watching those higher time frames. Higher time frames are either going to keep me out of a trade or keep me in trades longer. 5-minute chart, look at this. If you're trading the 5-minute, if you switch to even the 3-minute on that day, this is the 3-minute. Look at this. We found a base of support right here on the 3-minute, 434.42. We found our next base of support at 434.61. Our next base of support right in here, 434.95. Our next little base of support right here. Rode all the way up, and you could do the same thing on that 5-minute. Oh, we got some support right here, but we're still well above the 9 on the 5-minute. We weren't on the 1. This is where we're catching up. Nice base of support here, base of support here. Guess what? We're over the 9 again. We can ride this puppy wherever we want to ride it. And again, the thing that is keeping you from making or from being involved in this trade or these trades right here, folks, is fear. It is fear. It's fear. It's fear of giving money back to the market. It's fear of giving money back to the market. I'm telling you, folks, you have to get rid of that hope. You have to get rid of that fear. You have to do that. It is critical. Those are the two emotions that will kill you, will destroy you as a trader. Hope and fear. Hope and fear. Again, we're human beings. Yep, I'll do that, Big Bass. We're human beings. We are subject to real human emotions. Ignition candle. Okay, ignition candle. Let me find an ignition candle gone awry. Because I'm sure we can. Well, I guess this one right here. This is a big candle. This is 89 up to 47. You never want to take that candle up, folks. I'm telling you that right now. You just don't want to take that candle back to the upside. Never, ever, ever. Let's look for chop. We'll look for chop, and that's going to be a confirmation candle in on validation candle out on that very next candle. Okay. Actually, we didn't validate into this play to the upside on a true 920 cross. Validation, still no validation. Cross, still no validation into calls right there. We're getting validation all over the place into puts. I'm just looking for something that will... So down, green. Yeah. No, there's nothing there. There's no validation candle there to get you out. Essentially what it is I use confirmation and validation candles, and I can thank Charlie for that terminology. And if you know who Charlie is, I like Charlie. Really good dude. Still looking for that candle that got me in, and the next candle that got me out. Yep, right in here. It's 2 candles later. This got me in. Calls. Right here. We made a cross right here. Confirmation to get into that play right here. Actually, probably jumped that play a little bit. I did. I didn't wait for a confirmation candle, but I did breach to the upside. So as I jumped the play, ended up losing on it. If you take this candle right here at, let's say, 1014, let's say you don't have any lines of support or resistance, okay? You take this candle, you're probably still in on this candle, this 1015. This is the candle that gets you out. So ignition candle gets you out. If you breach this level back to the downside, anytime you breach the candle that you got into to the downside or the upside, so in other words, going against your position, you get out of the play. So you have to get out of this play right here, and guess what? It was a golden cross to the downside. So that would be a true ignition candle that got you out. I don't watch VIX. I don't watch UVXY. I don't watch the dollar. I don't watch the Qs. I don't watch Apple. I don't watch anything other than SPY and SPX. I think we have better trades and see the market clear after 10 o'clock. Yes, that used to be Fib's rule. Fib's rule used to be no trades until after 10. Joe, you nailed it. Look at your journal, folks. Supply and demand zone in the all-in-one indicator. That's awesome. Thank you there, Fibs. I said it already, but not where you do. You set up your stop when you enter on the 920 cross. Okay, so I'm not setting mechanical stops because I don't want wicks to take me out. My stop is, generally speaking, a candle that gets me in. I call it an ignition candle. For instance, let's say I took this double cross to the downside. It's a golden cross because we crossed the 9, the 20, and the VWAP on the same candle. So let's say I got in, I took and again, it's an aggressive play because we're jumping the 920, the 920 SMAs. If I got in on this candle right here, 1016, and this candle reversed and closed above this level right here, I'm getting out of the trade. I have to get out of the trade at that point. So that would be where I would set my stop. My stop is going to be a close above this level, 430.89. If it's good enough to get me in, it's good enough to take me back out. So 430.89 is going to get me back out of the trade. You're welcome, Alex. Or that's for Fibs. That's for Fibs. That would be a painful stop. Yeah, absolutely. Absolutely. Yeah, I look at gaps. I'm always looking at gaps. Yep, I look at gaps. So the answer to that is yes. And it's a painful stop. Yeah, but again, it's probabilities. You know, it's probabilities. If it hits your stop, you get the hell out of the trade. Wait for your next confirmation to get back in, then get into the trade. I feel you, Fibs. I feel you. I mean, we trade SPX, so yeah, our stops, when it gets you, it gets you. But that's just the reality of trading. That is the reality of trading. Any other questions? I don't really want to go longer than 2 hours tonight, folks. I've got a wife, and she might be home. Profits Reaper, you are very welcome. Rumi, you are very welcome. Any other questions? Any other questions? Thanks, Billy G. Decaf Doffy. No, fully caffeinated Doffy. Any other questions? Any other questions? You guys are welcome. Hey, thanks for being here tonight, folks. I hope you found value in it. And again, that's what we're trying to do. We're trying to KV4 coins. KV4 coins volume profile, Ani. Volume profile. Yep, and again, that's all we're trying to do is we're trying to help people trade. We're trying to teach people to fish. That's all we're doing, folks. Any other questions? Because I'm getting ready to kill this feed. I will I'll stop the recording here in just a little bit, and then I will buying profiles in all in one. Thanks, Phipps. I'll stop the recording, and then I'll upload it. Okay, so thank you all for being here tonight. Guess what? We're going to be back on the mic in less than 12 hours. So we're going to do this thing all over again. So again, folks, the only thing that matters is trade execution. I'll put it here in Discord. I'll tag everybody in it. The only thing that matters is trade execution. So just execute. When your edge presents itself, just execute. Whatever happens once you're in a trade, doesn't matter. Just execute. I will check my DMs. Or that's for Billy G. Okay. Anyway, thank you all for being here tonight. I am going to close it all out. So everybody have a great rest of the evening. I see I've got some DMs. I will respond to those. Have a great evening. We'll talk to you guys later. Jimmy! Hey, thanks for joining me tonight, Jimmy. As always, have a great evening, folks. And I'll see you guys in the morning. See you, bye.